Let's go on very quickly and talk about the clock which is ticking towards October for the rescheduled World Bank board meeting on Nigeria's request for a $1.5 billion first tranche budgetary support funding. The sum, which was the first of $3.3 billion, was first disclosed in June and due for approval in August, but that was postponed to October. So yesterday, the board of the IMF approved $1 billion emergency funding for Angola and another $765 million under this extended fund facility. Let's harvest some insight into this from policy analyst, who is also the CEO at COWRY Asset Management, Johnson CHUKWU. Good evening. It's good to see you.
Good evening, boss, and thank you for having me.
Hope you've had a very nice trading day, by the way.
Well, actually, said earlier, the market has actually been very relatively quiet. We've seen marginal losses, and in few instances, we've seen some marginal gains. So, in effect, we are riding the period.
Johnson, you know how to ride the tough time. You've been on this street for quite some time, so you know how to make money both on the market upside and the downside. But I just need to ask how you're feeling, as to how your portfolio is looking like. So let's talk about Nigeria's portfolio, by the way, which is looking dry. The country's fiscal balance is getting seriously unbalanced. Are you confident that Nigeria will secure this very important funding from the World Bank next month?
Well, Boston, the confidence will come from the fact that the federal government has begun to take measures to address those issues that World Bank has raised, and they consider that contingent to the disbursement of the budget support facility in Nigeria, one of which is the issue of petroleum subsidy, petroleum product subsidy. Of course, we know that the federal government, different representatives of the federal government has come out to say that the federal government is not going back on liberalizing the price of petroleum products and allowing market forces to determine the price. So we've seen government adjust the price on a monthly basis. Yes, we can't say we have a full deregulation of that segment of the oil and gas sector. But we've seen a significant improvement, and I hope what the government would do is to eventually take out some of those other subsidies that are being paid along the value chain, such as the Petroleum Equalization Fund and the amount being paid to PPPRA, so that we actually have a free market reign while the government agencies will act as regulators. The other aspect that has been a thorny issue on assessing this loan is the issue of electricity tariff. We also know that the government has come out boldly to announce an upward review of electricity tariff, particularly for those who are enjoying up to 12 hours of light. So, but for the harmonization or unification of the exchange rate, I think three of the critical issues have been addressed, but for the harmonization of the exchange rate. And I believe government has moved twice to adjust the exchange rate to about 379, the official window. What is now left is for government to eliminate the multiple market segments of the foreign exchange market. And that way would address all the issues that have been raised by World Bank, which is what gives me the confidence that come October, the government may be in a position to have our loan application presented to the board of the IMF.
So the World Bank is not the only multilateral agency. We're shopping for funds. We're shopping from the AFDB as well. It looks like almost all these agencies keep delaying approval for Nigeria, while you see other countries getting this funding support like this.
Well, we have to look at the fiscal framework in those countries. Take, for instance, Angola. I mean, the World Bank Vice President said that Angola, despite the fiscal challenge they are facing as a result of COVID-19 and the slump in oil price, has maintained a very strict fiscal policy environment and is adhering to the terms of the extended funding facility that was granted to them in 2018, the $3.7 billion, which the World Bank has just approved disbursement of another $1 billion to them, and also approved an increase of $765,000 increase to that $3.75 billion 3-year line. If you look at other countries like Egypt, South Africa, Kenya, these countries have very reasonably market-oriented fiscal environment, unlike what we had until recently. I mean, but the good thing is that the challenges of the environment has also nudged the government to accept the fact that you really can't run a big government in the world today. You can't have the government play the role of the private sector. And we're seeing the Nigerian government stepping back from playing those roles. The government is saying, look, the private sector will now be in charge of managing the downstream sector of the oil and gas sector. The private sector market forces will determine the price of the tariff for electricity charges. And these are things we've been pushing for quite some time. What is happening now is that when you have a market-oriented economic policy environment, you have more efficient resource allocation, which is what the World Bank and IMF have been pushing for. So those countries have been accessing their loans or multilateral loans because they have relatively market-oriented, more efficient allocation of economic resources in their economy.
Johnson, how critical is this funding support for Nigeria at this point? And what are the consequences if there are further delays?
Well, boss, in the first place, recall that the central bank governor said that this year, Nigerian economy may suffer 14 billion in balance of payment deficit. So if that happens, you're going to see a situation where the reserve will be depleted by almost about that amount, and then the exchange rate will come under severe pressure. You could actually see a major shift in exchange rate. Of course, that will bring some level of macroeconomic instabilities in the economy, such as increase in inflation rate. You have a unstable exchange rate, and you could actually have further flight to safety by investors who are already on the edge. So I think for us to have stable macroeconomic environment, we need that funding. Because as you know, crude price is still trading today below $40 per barrel. We're just producing about 1.3 to 1.4 million barrels. And crude oil earnings account about 90% of foreign exchange earnings.
Johnson, just a quick one, and in just 10 seconds. Is the Eurobond, can we still do Eurobond? Is that an option on the table for Nigerian government?
It might not be a good option now because it will be very expensive. You have weak balance of payment position, you have weak reserve position. If you go to the capital market to raise Eurobond, it's going to come at a very exorbitant rate.
Johnson CHUKWU at COWRY Asset Management, thank you so much for your time. Also a policy analyst. Do have a pleasant evening.